space talking about fundamental analysis is better than technicals, while some will say technicals is better than fundamentals. I must say that they both have their place. They are both equally important in trading, because with fundamental analysis, first and foremost, before we buy or sell something, we need to first know the value of the item we are buying or selling. And that is what fundamental analysis does for us. Okay, so with fundamental analysis, you first find out, okay, so is this currency worth buying or is this currency worth selling, before you decide to make the decision to either go long or to go short. So in the context of Forex, all right, with fundamental analysis, it has to do with gathering, economic data, okay, the use of macroeconomic data to find the strength or the weakness of the currency. So for instance, a trader can be tracking the interest rates of the dollar. And when he sees that, let's say, if the interest rate of the dollar is ascending steadily or is rising steadily, it could be a sign of strength for the dollar. Or when he monitors or studies the economic growth of the US economy, all right, he can study and then make a decision that from the way things are going, looks like the US economy is performing very well and it looks like it's going to get better. So he sees an opportunity to go long on the dollar because he predicts that the dollar will be stronger. This is how fundamental analysis is conducted. So basically, it's the use of macroeconomic data to deduce the value of a currency or the endogenous strength or weakness of a currency. With technical analysis, what is being used is a chart. So basically, technical analysis has to do with timing, all right? Because at the end of the day, if you know that the value of a currency is strong, all right? Let's say you know that you've conducted your data, you've conducted your research, and you've concluded that, for instance, the dollar is going to be strong in the next 2 to 3 months, all right? The next thing to find out is, should I buy now or should I wait? Okay, so technical analysis answers that question. So it answers the question of timing. Okay, it answers the question of timing. So the trader can decide to say, okay, when I look at the charts, I'll decide to buy at this price level, or I'll decide to sell at that price level. All right, so he can say that, okay, at the break of this swing high, I will execute my long position. Or at the break of this swing low, I'll execute my short position. This is the importance of technical analysis in trading. It helps in timing. It helps when it comes to the institutional context, they call it gatekeeping. Okay, so the institutional traders, what they do is they gather some macroeconomic data and then they run some scoring mechanisms, and then they use that scoring mechanisms to try to assess the strength or weakness of a currency. Okay, to assess the strength and weakness of a currency. So once they deduce that, okay, based on my data, based on the data collected, it looks like the dollar will be stronger in the next 2 to 3 months, then they do what we call gatekeeping with technicals. So that is when they look at the charts and they look at, areas where they can execute their long positions, areas where they can execute their short positions, and, also areas where they can exit from the market when the trade either goes either for them or against them. So this is basically the difference between the two. All right. So fundamentals answers the question of what should I buy or sell? Or what currency should I buy or sell? Whereas technicals answers the question of when should I buy or sell? All right, so fundamentals answers the question of what, technicals answers the question of when. Okay, so these are the two, clear-cut differences that you should know between the fundamental analysis and technical analysis in trading. Okay, so there are various misconceptions about what truly is fundamental analysis, because we have so many traders, who are involved in news straddling. So what they do is that when there's an upcoming news, they tend to place some pending orders at certain levels. So in case the news is released and there's a spike, then they try to, capitalize from, such a move. Okay, so they feel like they are actually conducting fundamental analysis, or they are trading based off fundamental analysis, but it's not the case. All right, so this is the difference. So we have trading the news and we have trading with fundamental analysis. So what's the difference? Of course, they both involve economic events, but with news straddling, all right, or with trading the news, what happens is that the trader just takes a trade, all right, based on markets, reaction towards a news release. So for instance, today we had US CPI and we had a bearish one. We had bearish data coming up for US CPI. And so those who took short positions on the dollar index really, had their trade going on very well. Okay, so that's an example of news straddling. The news came, those who took short positions, made some money, but those who took long positions, lost. All right, so at the end of the day, no one knew what the data will bring, all right, or what the data will be, whether it will be negative or positive for the dollar. Okay, so what some traders do is to engage or involve themselves in news straddling, placing pending orders in certain areas so that they capture the spike and then they are in. That is different from real fundamental analysis, okay, or real fundamental trading, which involves gathering some economic data. Because with fundamental analysis, what you're actually trying to find out is the economic implication, or the implication of economic data over a period of time. That's what we are actually doing. So for instance, you can gather the data of, let's say, non-farm payrolls or unemployment data over, let's say, 2 to 3 months. Okay, and then let's say that the trader decides to, assess this data month upon month upon month. And based on that data, he realizes that it looks like the employment condition of the US is doing very well. Okay, so he predicts that this will have a positive impact on the strength of the dollar. This is fundamental analysis. This is not news straddling. All right, with this process, it doesn't matter whether the employment data today, or let's say if the employment data comes up today to be positive or negative, it doesn't affect what he has gathered over a period. Because what he has gathered over a period is most likely to predict what will happen several months ahead. All right, so traders need to get the difference between the two. It's never the same. It's never the same. News straddling is different from trading with fundamental or macroeconomic data. Because with macroeconomic data, the predictions or the data has to do with, several months to years of, data, using that data to predict several months or years ahead. Okay, several months or years ahead of the market condition. So you need to know the difference between the two and use them very well. Okay, so these are some of the misconceptions you normally see out there. Which has to do with news straddling and also trading with fundamental analysis. Are we okay? So that is that. So also, one thing about fundamental analysis is, remember, fundamental analysis is not that common amongst retail trading. okay, I must say, is really common amongst institutional trading. Because in the institutional traders, hire experts, economists, researchers in their team to, try to find out the endogenous strength of a currency, all right, based on, data, one or two data, all right, compiled together, and then they use a scoring system to deduce the strength or weakness of the currency. So it's not that common amongst the retail space. But when it comes to technicals, it's really common amongst retail traders. All right, it's really common amongst retail traders. Retail traders, the easiest way to predict, let's say, the trend of a currency pair is to just look at the charts, look for some consistency in certain patterns, whether it's bullish. So if it's bullish, it will form a series of higher highs and higher lows. And when it's bearish, it will form a series of lower highs and lower lows. So when they see this trend on the chart, they can try to make a prediction based on repetitive patterns. Okay, so they are placing a trade or making a decision based on patterns on the charts, seen on the charts, unlike the institutions who try to predict based on macroeconomic data. So you see the difference. So it's never the same, and one isn't better than the other. They both have their place. If you want to find the value of a currency, use fundamentals. Okay, if you want to gatekeep or time your entries, use your technicals. So it is important for traders to know the difference between the two and know their place in trading. Okay, so my advice to any trader out there is not to just be, involved in just the technicals. It's important to also learn more about the fundamentals. It's important to know more about how to deduce the strength or weakness of a currency from macroeconomic data, because that will help to, spice up your trading career. Because at the end of the day, if you really want to, last long in this game, it's important to study the relevant stuff in trading. It's important to study the relevant stuff in trading. A trader who is more focused on the technicals, yes, he's able to, make some predictions, all right, but certain movements on the charts might confuse him. That's the bad side, or that's the downside to technicals. He might not know why, for instance, there's a sharp fall in, let's say, the British pound. All of a sudden, maybe perhaps he's expecting a certain level to be respected with, based on what he sees on the chart. He's expecting certain levels to be respected. Then all of a sudden, there's a massive breakout through that level. Then he's wondering why, what happened? Okay, so if he has some knowledge of fundamentals, maybe perhaps there is some form of weakness, all right, in the British pound based on certain macroeconomic data, like, for instance, let's say interest rates of the pound, falling steadily, and he doesn't know. He thinks he is focused more on the chart, so he thinks my level here needs to be respected. He doesn't know the fundamental condition, all right, or he doesn't know the macroeconomic condition of the British pound. When that happens, it becomes frustrating. Meanwhile, if he's able to juggle between the two, fundamentals and technicals, he's able to understand why certain things happen on the charts all of a sudden. So my advice to every trader out there is try to juggle between the two. Many retail traders, of course, are really well educated in the area of technicals, because that is what is common amongst the retail space. But it's important to also learn more about, how to find the endogenous strength of a currency using macroeconomic data. So I'd like to urge you all to trade safe with Geldex Capital. This is Wilson.